Hi everyone, and welcome to day 12 of your trading class. Absolutely beautiful weekend here, absolutely fantastic. There seems to be a few funny things going on Facebook at the moment. It seems I'm getting loads of emails from people about finding out about other people's profile, and it seems that as soon as I clicked on it, it's going to a load of other people as well. So it seems to me it's best to ignore it and just get rid of it. I don't seem to have any problems so far. It's just going to loads of different people. Right, so we are on managing risk in your trading. So sometimes you might hear some people saying they've multiplied their accounts in days in trading, and yes, it can possibly be done, but along with that goes absolutely massive risks. Anybody can double their money overnight by gambling, but it's not the way to do it. You've got to be disciplined, and you've got to take acceptable risks, and you need to measure if your trade is acceptable risk or not. So just remember, to be profitable over time, you've got to allow for losses, and the general public really aren't that good at measuring risk. For example, everybody buys a ticket for the National Lottery. We know that, and your chance of winning it is millions to one, but you still do it anyway because you think you might just get that chance. But with Forex trading, you need to be a little bit more scientific in the way you measure your risk. So it's very easy to learn, and not only that, it could also save you a lot of money because if you get it wrong, as I said, you need to know what you're doing. So a simple example, for instance, if we're going to buy the dollar yen at 88.50 and expect the rise to be to 89.50, that's 100 points. A point in the dollar yen is 0.01. Now, as you know, a point means the smallest quoted unit, and in this case 1 point is a 0.01 change in the exchange rate. But for the time you held the dollar currency against the yen, you had a risk. So the risk, if the dollar yen fell below 88.50, your entry price, you could make a loss when you close the trade. If the price fell to 88 and you close the trade, you've lost 50 pips. If the trade lost 50 pips at £1 a point, that's £50 you've lost. So the best way to do this is to set a stop loss. Now, I don't care what anybody says to you, and I go on about this all the time to our students. Always set a stop loss. Never go into a trade without having a stop loss in place. Because if you haven't got a stop loss and an announcement comes up, like for instance the non-farm payroll, you could lose a packet. So always make sure you've got a stop loss in place. You must have a stop loss in place. And then you know exactly how much you're risking with every single trade. So please remember that. Always use a stop loss. So the profit of this yen was to get 100 pips. Your risk was 50. Therefore, your risk ratio return was 2. So if you're not comfortable with that, then you shouldn't place the trade. But then you don't always have to have a 50 pip stop. You could use, most of the time, if I'm doing day trading, I'll only use a 30 pip stop. But again, it depends how long you leave the trade running for and how many announcements there are around that area. So remember, if the risk return ratio is too low, don't place the trade. And you could also save yourself quite a frustrating loss. But you must only take the risks worth taking, and managing the risk is very important, and this is why we're stressing it so much in these classes. So if you get to learn to manage these risks, you can take all the guesswork out of your trading. No problem at all. Just look at the risk reward every single time. So if you want to try and work out for me before tomorrow, the pound dollar, the trade entry price is a buy at 154.00 with a stop loss at 153.00, and the profit potential is 155.00. So what's the risk return ratio on that one? The euro dollar trade entry sell price 141.20, stop loss 14200, profit target 13960. So what's your risk return on that? Dollar franc or dollar CHF. Trade entry buy 105.40. Profit target 108.40. Stop loss 104.40. Okay, if you can do those three for me before tomorrow, and tomorrow we're going to talk about staking size and how it matters in your trading. As usual, any help or advice, please feel free to contact me. Even though it's the holiday, my laptop's never off and I'm always pretty close most of the time, but I will always reply to your questions and emails. I hope you've all got your accounts open now and it's getting a bit more exciting for you. We've got off the candlesticks and now we're on to risk reward and staking our sizes or size of stakes on your trades. So day 13 tomorrow. I'll speak to you all then. Cheers.